but you have to have experience in determining where the market's not likely to go and where it's most likely to go. How much of a retracement is reasonable? So that way you can look for a trade that allows you to have a stop loss of less than 5 handles. Now, you've seen me use stops that are less than 1 handle. That's not necessary. 5 handles or less, I think that's a good baseline. The average inner circle trader student that's being trained with me this year, you'll be able to operate with that, and it'll be comfortable. It won't be, oh, this is too much risk. It's just too much. No, it's not. It's not too much at all. You have to at least assume some risk, folks. You know, it's just the way this business is. And if you're completely averse to taking on any kind of risk, you're not going to make it as a trader. And that's the God's honest truth. There's no way of sugarcoating it. That's just the reality of it. If you think that you can go through this industry and never have a loss, or you can't accept the fact that you can lose a lot over your career, money and transactions, and still be able to do okay. Again, if you can't warm up to that idea, speculation and as a trader, you won't make it. You have to accept that. You have to embrace that. And it's just the perception of how you've painted it, either fearfully or unrealistically. Because everything we do in life comes with risk. Your breath is not promised to you 10 minutes from now. Getting into a car to go down the street, get some milk. You know, getting there and coming back safely is not guaranteed to you. A lot of things can happen between that inception and the terminus of you coming back into your home the way you left it. That's not guaranteed to you. But you dismiss it. Why? Because you've done it enough times. You have experience doing it. You're not worried about it. You know the same damn potholes. You could drive down that road without seeing it and know, okay, I'm going about this speed. We're coming close to that pothole. Because you've been there before. That's all trading is. I'm teaching you by watching these candles minute by minute to experience that. So that's where he's at. He had his first real push the button, pick it when you think it's going to do it. And he drew down, and I helped him on Friday to get it back to where it needed to be at. I didn't need to tell you that shit. And some of you are like, oh, well, this isn't as exciting as I thought it was. Did you think just because I was his father that he just fucking knew how to do this on his own? Like he was born with this? No, he doesn't know hardly anything about it. And it's my excitement to bring him up through it. But you have to let failure do its role. The very thing I tell you not to be afraid of, that you're trying to avoid, I'm putting him in a position where he will feel that. Because once he feels it, and that adversity of, okay, you think you know what you're doing, so show dad what you know. And he saw he was unable, like 3 minutes. And in fact, it was probably just a little bit under 3 minutes. He was squirming. He's like, why isn't it going up there? Well, I said, it is. It will. You just have to relax. I told him where it was going to go. And I said, you buy it in the next down candle, you buy it when you feel like it's time for you to push the button. But it has to be black. It has to be going down. I don't care how much from the time it starts turning black. In other words, when the candle's starting to go down and we're bullish and we're looking for a buy side liquidity pull, I said, you're going to buy the next down close candle. Why? Because what I was putting him in is already the institutional order flow was bullish. And I'm teaching you that down close candles will support price if order flow is bullish. And I told him, I said, this area right here, that is a fair value gap. It can trade into that. I don't care where you buy it in there. I don't care. But when you buy it, your stop loss has to go at that low. As soon as you push the button, you put the order in that's going to be a sell stop right below that low. And then you just wait and you watch it. And he just, as soon as the candle turned black and it started as a down closed candle was starting to form on the very next 1 minute candle, boy jumps in immediately. Wasn't even in the fair value gap. Didn't even trade into the fair value gap. And I said, is it in the fair value gap? Because no, I'm afraid I'm going to miss it. What the fuck? What are you talking about, miss it? It didn't even get into the fair value gap yet. What are you doing? The rules were this: it has to trade down into that little range. Once it does that, the candle will be black. It's going down. It's a down closed candle forming. It has to drop down into that little barrier of high and low, that little segment that you understand listening to me as a student. That's a fair value gap. He can't spot them yet. And I'm teaching him. But he wants to do it pushing the button, which is what? The equivalent of most of you out there. Start trading live. There's no better way to learn than to get out there and trade with a live account. That's fucking bullshit. You have no idea what you're doing. Just like he found out. Well, I asked him, I said, did it get into the fair value gap? He goes, I'm afraid it's going to move without me, Dad. I'm like, if it fucking moves without going down the fair value gap, who cares? Who cares if it does that? You missed it then. That's the whole point. Don't change the rules. Don't color outside the lines Dad's putting for you. This is what you're supposed to be doing. When it goes into that area, once it drops down into it, as soon as it gets in it, I don't care when after it does that. But as long as that candle's black, it's down. As long as it's not above its opening price, you can buy that. But it absolutely must trade in between these two lines, that fair value gap. He goes, what happens if it does it again? I said, then you can buy it again. He's only had one contract on. So can I do one more with this one still? I said, yes, you can do that. So it goes down. It touches the high end line. It doesn't go into the fair value gap. It just touches it. What's he do? Waits. It goes down into it some more. Now it's just above consequent encroachment. I'm waiting for him. It's like, okay, now he's going to push the button. No. It goes back outside the fair value gap, goes above the opening price, and starts another candle that's green. It's starting to run higher. Then he buys it. I said, what did you just do? He goes, I bought another one. No shit. I see you did that, son. But why did you do that then? Because I saw it go down there, like you said, but I wanted to see if it was going to go up after it went down there, because I was afraid if I bought it down. I said, what are you afraid of? What are you afraid of? The fact that it went down there like you were expecting it to, the fact that I told you to buy it when it went in there, that was the rule. The rule was you do that, and you can't buy it after it goes above its opening price. What part of that didn't you understand? He goes, I understood it, but it makes sense more for me to see it go away from it. I said, but by doing that, do you understand that you just opened up more risk? What do you mean? I only bought one more. You bought another contract, yes, but the stop loss that you're utilizing is now further away from that entry. You've incurred more potential open risk. Do you understand that? No. You bought at a higher price than you should have. You paid too much money for it. And you're using a stop loss down at a low that makes sense for the structure on this chart. It's sound where it's at. It's not allowing for a lot of risk. It makes sense for the stop loss to be right where I told you to be. But now, because you bought it above and it started running away, you bought it at an expensive price. You bought it at a premium. That's not what you do. You don't do that. So he didn't like the idea that he did that wrong. And he didn't like the fact that I was correcting him and telling him, you didn't listen. You did it wrong. And if this market were a trade that I'm not putting you in, this could be easily retracing back down to that stop loss if you don't know what you're doing. And you took a larger loss than you would have done if you followed the rules. Do you understand that? He goes, yeah, I understand. And of course, he feels deflated and stuff. And I told him, I said, this is all part of this. And Dad's going to correct you when you do shit wrong. But don't take it personal. I love you. I want to see you do well. But you have to listen. And don't feel bad, because I have all these people around the world that most of the time these motherfuckers don't listen either. Okay? It's normal. I'm the same way. Don't do this. I'm going to do it a dozen times. Okay? It's normal. You're learning how hard this business is. In your mind, you want to feel like you're doing it the right way when Dad's telling you the right way. You don't have the experience of seeing it being the right way. You want to do your way. And your way is through ignorance, and you have no idea what the hell you're doing. So that part of it, well, it was uncomfortable for him. and my obsessive compulsive fucking flipped out. And I kind of feel bad looking back at it now because I'm giving you a more tamer, like really dialed down, because I zapped. I was like, what the fuck did you just do there? Why'd you do that? Why did you just do that? Because I wanted to know it was going to go up. Because if it didn't go up from the fair value gap, if it would have kept going lower, I would have took a loss. That's exactly what's supposed to happen. If you're wrong, that's what you're paying the stop loss to do. That's exactly what it's there for, to limit your loss. Not say, okay, this is where I think I'm wrong. Let me buy it at a higher price so that way I can take more of an ass chewing when I'm wrong. That's what you are trying to avoid. That's the analyst is supposed to be kicking your ass right now, and I'm the analyst because you don't have the experience. I'm jumping your shit right now because you did exactly what I told you not to do. You did exactly what I told you not to do. I told you to buy it as soon as it gets in the fair value gap, and I gave you free reign to buy it anytime inside that fair value gap. As long as the candle's down, it's black, and it's in between these two lines, you have the control. You're holding the wheel. You push the button. You buy it. As soon as it gets in there, it's on you. The stop loss is where I told you to put it at. Done. And what did you do? You waited for it to go down there. You waited for it to leave it. And then you waited for a new candle to open up, and it's running higher. And you bought that. That is chasing price. You buy in down close candles, son. All the time. If you do that, that will save your ass more times than it will hurt you. You'll do it wrong sometimes and it'll still go lower and hit your stop loss. But by far and large, that will save your ass. You do not buy a fucking candle after a fair value gap and an expansion begins. You don't do that. Because it can retrace and do what? Go right back into that fair value gap deeper, completely close it in, or go to your stop, and you've incurred larger loss than is necessary. So, for some of you that think that, oh man, I wish I was his son. Man, it would be so awesome. No, you have no idea. I'm like a fucking drill sergeant because this shit matters to me. And if you're going to do it and you're going to train with me, you're going to be fucking told this is the wrong fucking way to do it. And you're doing it wrong. And you're going to be told that you're doing it wrong. And you need to understand it's uncomfortable to do that wrong. Otherwise, if I just let him feel like, well, that's good. Explore yourself, son. You know, sow your oats. Go out there and find yourself in the chaos of price action. And figure it out on your own. Forget it. There's rules. There's rules of engagement, and I know he has about a 95% chance of probability. Unless I literally put him in the trades and guide him on every single one of them, he's going to shit the bed on this. And I'm comfortable letting him do it. I could sit here and let him do this and the public know nothing about it. But I want you to know this is what it's like. You'll learn from it. He's going to learn from it. What I suspect is going to happen is his first losing trade, he's going to say, Dad, can you help me? To which I will say, help you how? I'm going to remind you of the rules. I'll sit with you and tell you what you're about to do. Is it inside the rules I gave you? I'll tell you where it's going to go as a draw on liquidity. But your entry, you are afraid. And I can't make you overcome that until you do it. You do it. After we were done and we were having something to eat in the afternoon on Friday, he says to me, he goes, Dad, are you upset with me? I said, nope, I'm not upset at all. The trade's done. It's over. You're my son. I love you. But you're going to have to learn to follow the rules. Because when you mess up, Dad's going to jump your shit like that. Because it matters. You have to have a response that you remember, oh shit, that was not comfortable. Because you're not feeling any monetary loss right now. So the only thing you're feeling is you did not follow the rules, yes. It didn't take anything out of your pocket, no. But Dad jumped your ass. So that's that emotional response to not following the rules. There's nothing wrong with that. You got taken to the woodshed. I take my students to the woodshed all the time. I jump all your asses all the time because I love all of you. I want to see you do well. If I sit back and let you do this dumb shit all the time, figure it out on your own dumb shit, push a button in a live account, learn how to trade with a live account, fucking dumb shit, you're going to fail. All you're doing is guaranteeing you're going to fail. So I told him, I said, listen, let's go back over your rules. Okay. Let's consider what it is that we're trying to build in you. Okay. So how to pass the $50,000 funded account challenge. There's a company out there that offers this threshold for funding. You're not getting $50,000. You're not getting that. Okay. And they have a cost of, one of them is $165. And I guess if it's taxed, then I don't know if they use the local tax rate or whatever, but we'll just say it's Maryland tax and 6%. And this called around the number of $175. Okay. So it's going to cost you out of pocket $175. The profit target on the $50,000 is 6%, which is $3,000, which is Mickey Mouse shit. Anybody can find that over the course of 4 weeks. Now, notice I said 4 weeks. Just because they say you have to have a minimum of 5 days profitable trading before you can get your first payout, that is not an invitation like most of you are seeing it as. Okay, it's a short little race. We got to do it in 5 days. Everything has to be completed in 5 days. Who said that? That's why I was very specific about asking, is there a threshold for time? You have to have it met. You have to get your profit target by this amount of trading days before the end of the month, or in a week, or in 10 days, or something to that effect. And you don't need a lot of time to do this, by the way, but the profit target is 6% of the $50,000 or $3,000. They offer you and tell you that you can trade up to 5 contracts. Scratch that shit the fuck off. Okay? Don't even think about that. That's absolute lunacy. Don't even touch that. Don't do that. Okay? I can go in there and do that. But that's not the same as you. You want to use 1 contract. Because this is all about getting bread and butter, secondary source of income. That's what you want to try to do, right? Because if this is Lambo fucking lifestyle, okay, Forex lifestyle, or whatever the hell those guys are with the 3 cheap ass laptops on YouTube. If you think that that's the way you want to go in life, that's fine. Go ahead and chase that. What I'm trying to do is give you the working class hero approach, because that's how you're starting right now. Most of you don't know what you're doing. And I'm not trying to promise or entice you into thinking you're going to get rich. That's always a possibility if you push it, but nobody's promising you that here. If you can make your car note, if you can make your rent payment, your mortgage payment, or a large percentage of it, you're winning. And don't let anybody tell you you're not. Because if you don't have it in your pocket every month right now, and you can find that through this, what do you call winning? Because I think that's a win. The max loss, they tell you, is 2%, which is $1,000. And the maximum ruin, we'll call it that way, 4%. So if you shit the bed $2,000, you pretty much failed the whole thing. That's my interpretation of it. It might not be that finite, but that's what I'm going to talk with here, because that's the rules I basically framed it with him being my son, Cameron. So let me ask you a question. If the daily max loss is $1,000 and you're trading 1 mini contract, 1 mini, that means every full handle move, every 4 ticks, is a $50 price fluctuation in terms of profit and loss for you. How many handles can you take as a loss in 1 day with 2% or $1,000? 20. Have you ever fucking seen me ever outline a trade that has a 20 handle stop loss? No. Nope. I'm teaching you how to engage with a 1 minute chart. 5 handles is a very nice, safe, round number where most of your stops will be less than that. It'll be less than that. But don't be afraid if it is a 5-handle stop loss. And there's a lot of snobbery with these new folks that are coming into the trading industry. Yeah, it's got to be an ultra small stop loss, or it's just not civilized. Get the fuck out of here. Listen, a stop is relative to the market structure that it's framing the setup in. So to have this idea that you always have to use a 2-pip stop loss or a 2-handle stop loss, get that shit out of your mind right now, because you are painting yourself into a box. You don't realize it, but you're saying that you can only see this market with those parameters only. You got to be flexible, especially if you're going to be pyramiding. Pyramiding is going to have to be flexible in terms of how much of a movement can you absorb. And if you have just 5 or 2, or you're not going to be able to do pyramiding effectively. The numbers will start messing with you. You can't calculate that fast when you're using lower time frames. Like, it's just so many things to juggle. So everything I'm teaching you here today, no pyramiding, straight one shots, okay? So we're not talking about doing 5 contracts. We're not doing 4. We're not doing 3. We're not doing 2. We're doing 1. One measly ass contract. One contract that makes or loses $50 per handle fluctuation. Let me ask you a question. What's more likely to be seen intraday in price action for the ES, S&P futures? 20 handles, multiple times, or 5 handles? Clearly 5 handles, right? But something happens when we start messing with what we considered live trading, or not that this is even live trading, because this is the evaluation part. Like, you got to get through this to get to the part of where you now make the trades that split the profits with this company, whatever company that might be. You feel like you got to do more. You get into the trade, it starts moving for you, and you're thinking, oh shit, this might be one of those 30 handle runs. And you don't take your 5 handles and get out like you're supposed to, like the rules fucking say you're supposed to. And you have a Cameron experience where you just fuck around and find out. You don't want to do that. If you're going to do this, you run it like a business. And you take advantage of these opportunities while these companies are being permitted to exist. Because they might not be here 2 years from now, 3 years from now, whatever. Regulation can come in and say, it's time to shut this show down. So if you're going to do it the right way. So what we're looking for is one contract. You're trading one contract, and guess what that does? That eliminates 90% of all of the ass puckering that you're going to feel when you put the trade on. It's not going to be immediately up and down $300, $500, $600, $700, and you're freaking out because you're over leveraging. How fast are you going to get to that $1,000 daily loss if you're trading 5 contracts? 4 handles. That's it. Then the ES takes a walk up your strata chocolata. You're fucked. One contract, folks. One does this. I showed you with one contract using an industry standard shit broker, shit platform, Thinkorswim. I doubled the account with one contract. With losses. 100% return. 5 weeks. Daily sign in, showed you the statements, the whole business, okay? So this is 6%. When I first started teaching on baby pips, I told everybody to do that. Aim for 6% a month, and it'll double your equity every single year. No matter what the equity balance is at the beginning, 6% is compounded over the course of a month, every single month, becomes a 100% return at the end of the year. Now, some of you You're thinking, well, shit, that's doubling a $50,000 account. I could really use that. Right. But most of you are saying, that's not enough. Okay, let's go back to square one. How much are you making right now from your trading? Oh shit, we don't want to have that kind of conversation, right? Come on now, ICT shit. Don't be reminding me about that stuff. That's why I'm here after all. Right, that's exactly why you're here. They learn how to make fucking money. So stop thinking about money ass backwards. You're trying to jump ahead to Olympic level returns. $15,000 withdrawals. I got a 5-figure first withdrawal. How about just doing $1,000 and being fucking happy the fact that you got your groceries paid for and maybe some of your electric bill, and feeling the ease of that coming off your back and thinking, I didn't have to do very much to get that. Man, this isn't as hard as I was making that to be. That's the right way of going into this. But nobody writes fucking books like that. Nobody makes videos on YouTube but me like that. This is the real world shit. This is how you master money. You don't walk out there thinking you're going to be rich real quick, because it will show you that is not happening. So we understand that there's more likely to see very easy, repetitive deliveries of 5-handle price runs. The market's going up and down all day long. I'm going to make you a guarantee. Ready? Check this out. On Tuesday, E-mini S&P is going to move 250 fucking handles. What the fuck did you say? Yeah. It's going to move 412 fucking handles on Tuesday. Want to bet me? Who wants to take that bet? If I put you on a 15-second chart and you buy every short-term high and you sell every short-term low, back and forth, and that shit continuously builds up against you, back and forth, ebb and flow, all day long. Because the market's not going sideways. It's not going straight up. It's not going straight down. It's going up and down, up and down. And if you're wrong on every one of those swing highs and swing lows, and you keep getting burned, and you have enough margin to weather it, count how many times that market's going up and down from handles. It's going to move a lot. But you don't look at it that way until you blow your account. And you're thinking, shit, the range on the day was only 17 handles. But this son of a bitch went up and down, up and down, up and down all day long. Over 100 or 200 handles, the equivalent. And you got proof of it because you shit yourself in your account, buying and selling at all the wrong times. I discovered that in the 90s when the average daily range for the S&P was 3.5 handles. Yeah, how about that? So 5 handles a day is where we're still aiming for. 1 for 1 is still good. If you risk 2.5 handles to get your 5, all the better. Stop listening to people that want to use book smarts, okay? Book smarts, mathematic text, statistical probability bullshit, okay? All that nonsense, calculus. They want to bring calculus and trigonometry and all this other horse shit into trading. Geometry, no fucking place in trading, okay? It has nothing to do with it. You can make money trading 1-to-1. The problem is you're using stupid shit from books and retail logic that has no real reason why the market's going to cause it to go up or down. I'm telling you what makes the markets go up and down. I'm proving it every single day. Telling you every fucking minute candle where it's going to go, where it's not going to go. It's going to do this, it's going to do that. What makes more sense? What you've seen and witnessed live with me, or the nonsense that you've lost money trying to trade in those books and those courses and those other shit you see on YouTube? Think about it. That's all I'm asking. You absolutely can make money with 1-to-1. You can risk 5 to get 5. Why? How can you trust that? You need to have 3-to-1 because the losing trades are going to eat up your wins. Yeah, if you fucking suck, If you suck as a trader, you're damn right it's going to be just like that. You're going to fucking lose your ass if you do that. But I'm teaching you how to read price action when it's most likely going to move higher, when it's most likely going to move lower, when it's going to be shitting itself sideways, consolidation. Are you paying attention? Are you paying attention that you're learning how to read and navigate the terrain? We know when it's likely to be moving higher. We know when it's likely to move sideways and be fucking ugly. Yes, there's opportunities to trade in that. But why the hell do you want to do that? Why would you want to risk your business that you're starting on a shoestring budget, these funded account challenges? Why are you going to risk it in those types of conditions when I'm teaching you this is what it's like? And then here, when we're not in those conditions, you can make all the entirety of your weekly objective on one good day. If you just simply fucking wait for it. But if you can't, because of circumstances in life, your schedule, the market that you're trading maybe isn't moving. Okay, no problem. You adapt. I'm going to give you a couple different approaches to do this. And you allow the market to dictate how you're going to engage. But you're going in with one shot, one kill always. That's your first model of choice. You're looking for it. You're risking no more than 5 handles. The easy one-to-one bread to butter setup that gets you your ends is 5 for 5. Risk for 5, take your 5, move to the sidelines. Do not be afraid because it's not 2-to-1, 3-to-1. Oh, your losing trades are going to eat up all your winning trades. We're not following a logic that goes out there and just rolls the dice 15 fucking times in an hour. I don't trade that way. I'm not teaching you anything like that. You're looking for a very specific thing to occur in price around a specific time window. That's very organized. That's not sporadic. That's not a condition that causes a gambler to have free reign. There's rules, and you engage with these rules within this time window. If you're outside the time window, you can't do shit. You're not allowed. The casino is not open for business right now. Sit your ass outside and wait. That's not how it is in the real world, but you have to operate this business like it is, just like that. You're not sitting here fucking around in the Asian session. Well, I got to get my 5 points in Asia. Could you? Yeah. Is it likely? Probably not. Odds are better in London, in New York, morning session or afternoon session. There's your 3 time windows. Which one fits for you? Well, none of them, ICT. Well, you're going to make some changes in your life, aren't you? That's not the answer you want to hear, but that's the answer you need. I can't. Then you can't. There's nothing I got for you. There's other things that you can trade and use, but I'm telling you, this is the thing you want to hear deep down inside, as much as you might not want to hear it now. This is the shit that works. This is the things that repeat. And if you have to make an alignment with your personal schedule, your work, your family life, you're going to have to make changes. So you can look to a 20 handle move before it wipes you out. We're never taking on that much risk in a trade. One contract is you're never going to have drawdown in a trade that is expected to move 20 handles against you. 5 is the maximum, and we're going to be looking for less than that. Now, think about how we can take this goal of $3,000 versus 6% on that account. How can we chew that elephant up? Okay. Obviously, everybody goes out there and tries to do, I want to pass my funded account challenge in a day or two, or in a couple days. Why? You've already admitted, if you're being honest, that you don't know what the hell you're doing. You're just now coming into this. You're learning. Oh, but I could afford to do a reset. Why would you even want to do that? Nobody starts a business and says, you know what? It cost me $80,000 to get all the advertising done and get all this shit stocked up and all the flyers and other things and pay the advertising agencies to do their thing. And, if we run ads at a bad time, when nobody's really been watching TV, everybody's asleep during that time, fuck it. We can afford to do it again. Nobody does that. But everybody does that shit in trading. That's how they run their business. And they wonder why everybody goes tits up and they can't make any money in this business. Because you're doing everything backwards. But it feels natural. It feels natural to do it that way. Because you've not had proper guidance. Or you haven't felt the pain of doing it incorrectly like that. And then learning by experience. This isn't the right way of doing it. And then you do what? You go out looking for somebody who knows how to do it. And nobody knows how to fucking do it. They're all telling you the same shit. Risk 2%. Push your edge. Take every fucking trade. And don't lower your exposure when you take a loss. It's all the bullshit.